Hey guys, what's going on? Danny Deals here. It is July 26, 2023. It's 1:41 p.m. out here in beautiful Los Angeles, California. A little bit after market today on a beautiful Wednesday. Of course, I would like to talk with you on behalf of Hurricane Lopez and Stock Karen and all our friends here at Un Poco Mas, the show where we give you just a little bit more, guys. Got the phony tail working, the man bun going today, pulling out all the stops. The SoFi stock was up 19 cents or 2% on the day, down 2 cents after hours thus far. Guys, the chart looked very strange today. Had that mountain right at open and then that quick sell off we see. But then we had just this odd volatility up and down all day. We did not see that hump pattern that we tend to see every day. Market makers, in my opinion, have really flipped the script. Last quarter, we saw, increasing FOMO, increasing volume coming into the week before the ER, sucking retail investors in. There was a lot of positive press around the SoFi stock. Analysts seemed very positive. There wasn't a lot of worry about some of the things that they sort of magically began to worry about when the short attack took place right after the earnings report. But this quarter, they've completely done the opposite here this week. They've taken the volume out of the stock. They went ahead and attacked the options on Tuesday instead of late Wednesday into Thursday. So I think they drove a lot of retail investors off their options early in the week. Options at the $9 level, of course, were up significantly today. 950, I believe, was up a bit, but the volume left, guys, on these options is not massive or anything. So we only have the 3,000 calls at 9, 12,000 at 950, and then 10,000 at 10, 2,000 at 1050. So these are not massive volumes of these short-term calls that you would normally expect to see with the SoFi stock coming into an earnings week. And guys, the volume today is only about 33 million shares traded. So just pretty anemic. Just not what you would expect for a hump day pre-earnings. You'd expect at least 50 million shares. Um, you'd expect some of those call volumes to be at least double, but I feel like market makers have taken sort of a completely different approach this time. They're trying to go real low profile. I think they're trying to not call attention to the fact that the SoFi stock has been on fire, that the stock just doubled, that the stock is on the brink of profitability, that they have this massive short on the stock. I feel like market makers are just sort of trying to go, no, they're trying not to invite because last quarter what they did worked. The Chia Pet came out and did his, double dip douchey downgrade, and market makers were able to just absolutely kill the stock from 650 down to the fives, then down to 450, and they just wrung retail out, and they made a lot of money with that FUD Chia Pet Wedbush short attack. And I don't it just doesn't I think they know they're not going to be able to do that again, so I think they're setting things up totally differently. Made money on the options early this week, and then perhaps they'll do just a little bit of a moderate run up here later in the week. But guys, want to talk about this chart. I showed you, of course, been drawing my graffiti on this thing for weeks. This level 941, I keep telling you guys, this is a key level. The stock keeps accordioning, barcoding around that level. You see here, here, here. It tends to be a very, very sticky level. And guys, yesterday we broke down below this support line that has been pretty solid for the stock going back for weeks and weeks now. And we actually broke down even a little bit further and looked to have found some very, very short term support like at 928. But then late in the day, guys, end of the trading day, the stock just rallied hard. Volume came back into the stock. And we regained that channel that we've been wanting to trade in. Um, Whoops, let me undo that. Let me just clear some of this crap off of the I don't know what this thing's doing, guys. It just doesn't want to cooperate with me here today. But this is my 1 day chart, guys. I just have too much schmutz on the chart, and my computer is overwhelmed by my brain power and my research. No, there it is, guys. So you see the line. You see the stock broke down hard, and then it basically was trying to trade sideways there at $9.28 up to $9.34, $9.35. Broke back down, came up, tested the line at 2:42 p.m., 2:45 p.m., and then broke back down and again wanted to consolidate briefly in that 942, 943 range we keep talking about. Attacked the stock again, sold back down, this time found support again higher, 935. And then, guys, the stock was just, up, up, up from, say, oh, I don't know what time is that, from just after 3 when we had that big sell off for the next. For the next hour, I guess it is, next 50 minutes, guys, there was just buying, buying, buying of the SOFI stock, and we were trading like 22 million shares there just toward the end of the trading day, and then it just popped back up rapidly to that 33 million level. But guys, volume has been very moderate. Let's take a look at the shorts again, guys. The data I'm seeing does not make that much sense to me. They're saying the shares on loan just continue to plummet, but the short interest of the free float continues to stay flat or go up. You note that here on the graph, guys. This days to cover has just gone all the way down from 6 to 2. While the short interest popped up to 15, almost 16, came back down below 15, and now popped back up to 15.25 just today. Um, why would the short interest of the free float go up when the borrowed change was going down so much? Again, yesterday I speculated that companies that were short long market makers were dumping some of their long shares, either covering. But I feel like some of these companies have to be going naked short, or these statistics just don't make that much sense. But guys, if you understand how these mechanics work in the dark pool, please illuminate down in the comments. Let us know what you think's going on with the short interest, because utilization's going down. Cost to borrow was not that high today, but the estimated short interest of the free float continues to be quite high, as does the free float on loan, but the shares on loan continue to come down and down and down. Um, Guys, just want to draw your attention. I'm going to take a look at another article on Seeking Alpha by this guy, Dare Senzizbayev. And he is a financial blogger. But again, I just want to, I always tell you, when you're reading an article, when you're reading a call, when you're reading an analyst, look at their rating, guys. This guy is a solid 4-star financial blogger. He's ranked number 4,000 out of 26,000 financial bloggers. So that puts him, squarely in the top 20%. And he's ranked in the top 7,000 out of about 34,000 experts. So this guy actually knows what he's talking about. And then if you take a look at his just his bios, I'm a highly experienced chief financial officer, strong background in oil field and real estate, decade of experience in finance, led many numerous complex due diligence efforts and merger and acquisition transactions domestically and internationally, research analyst. So guys, this guy's not some buffoon you see like a David Modell with he's not some complete moron who's just aggregating data and like, Chat GTP writes his articles. This is the real deal. So July 26, 2023, so this comes out today in Seeking Alpha. SoFi Technologies, a stellar secular growth play. SoFi is one of the leading U.S. fintech companies, diversified. The company is well positioned to capture the secular double-digit growth projected by BCG for the whole fintech industry. According to my analysis, the valuation looks attractive at the current stock price. Um, So, guys, good news. Investment thesis. SoFi is one of the hottest fintech companies, which is currently on fire. Um, Goes solely through its app and website. Of course, there's only one or two branches that SoFi more or less inherited when it was a smaller a smaller community or just very small local bank. That's where SoFi got their bank charter. It was a bank out of Sacramento, and then I think they also had like one branch in Utah. So there's like three branches total. So SoFi just doesn't have any of the overhead. Their financial services, lending, and technology, those are their three platforms. He runs through all the data, he runs through the financials. SoFi is rapidly growing in the fintech. The top line demonstrated substantial growth over the past 5 years. Earnings have been volatile. Cost of client acquisition has been relatively high, but the one stop shop. He basically talks a lot about cross selling, guys, and why cross selling and the wheel strategy are the key to this entire company. And that's something you should know if you're investing in this bad boy. Um, the customer acquisition costs have been very high. That's why we haven't been making profit. But as this cross selling kicks in, guys, we're going to make a ton of profit. We're going to become a free cash flow machine. The business model has not had an opportunity to work yet, guys. We haven't really reached scale yet. The company is still growing rapidly. The company is in a solid financial position. The latest reporting date had 2.5 billion cash, 16 billion loans held for sale. On the other side of the balance sheet, there was about 10 billion in deposits. That said, the balance sheet looks prudent. As a young company, SoFi is not paying dividends. The company needs capital to fuel top line growth and broaden product offerings. Therefore, I do not expect dividend payouts in the foreseeable future. The latest quarterly earnings were released May 1. Top consensus estimates grew revenue 43%. EPS improved notably from minus 14 cents to minus 5 cents. And you can see that graph here. In Q1, SoFi added 433,000 members, 46% year over year growth, and aligned to 8.6 million products or members. I'm sorry. The upcoming quarter's earnings release is planned on July 31. Q2 revenues expected to be 476 million, meaning 33% year over year increase, guys. That's incredible top line growth at 33% in this economic environment. The good sign is that the EPS is also expected to improve from minus 12 to minus 7 cents. In fact, I expect it to be a lot better than that. Guys, let me pause. I have someone, a bill collector probably, shaking me down, repossessing my vehicle. I'll be right back. Welcome back to me. Sorry about that, turds. In any case, welcome back to Un Poco Moss. My name's Danny Deals. We're talking SoFi stock. It's almost 2 p.m. out here in Los Angeles on July 26th. So we're going through this article, guys. SoFi added a lot of members, revenues up. They beat like last 7 quarters. So during the latest earnings release, management raised guidance. Positive sign. Sorry, guys, must be the witching hour. People keep coming by the office here. But during the latest earnings release, management did raise guidance, positive sign. Expected the top line to increase 27 to 31% range instead of 25 to 30. So that's excellent top line growth, guys, 27 to 31. And they expect the adjusted EBITDA margin to now be at least 14%, while as previously expected 13 to 14, and is a substantial improvement compared to the FY 2022 EBITDA margin of 9%. Overall, I have a high conviction that the company is well positioned to benefit from the secular favorable tailwinds for the fintech industry, mainly because of its diversified product portfolio. We'll ignore that knock, guys. Valuation. The stock delivered a massive 107% rally year to date, significantly outperforming the broad market. SoFi has also significantly outperformed the financial sector, demonstrating a mere 3% rally to date. Seeking Alpha Quant assigned the stock a relatively low C minus valuation grade due to its substantial price to sales and price to book ratios compared to the sector's median. In the rightmost column, you can see to what extent SoFi's valuation ranges are higher than the sector median ratios, But these valuation metrics take into account only the trailing 12 months and the upcoming year. This is critical, guys, because SoFi is a growth stock. They're growing 30%. So everyone ignores that. We want to value them like a bank and just ignore the growth, just ignore Galileo, just ignore everything, just, have our heads completely up our butts and just pretend we don't understand what this is because we want to kill and short the stock and we're serving our masters and we're chia pets. You need water, spread seeds on us, and we grow. That said, years beyond are ignored, but SoFi is a growth company and its stock is a long duration investment. Therefore, here we need to look at years beyond 2023 and 2024 to determine the upside potential. As we saw in my analysis financial section, the EPS is still negative, but consensus estimate that will turn positive FY 2024 and is expected to expand rapidly during the years beyond. And you can see that here in this table. And I encourage you to go over to Seeking Alpha and read this article for yourself. Click on all these graphics. You can't really see them that well, so I'm not going to spend time blowing them up. But by December 2027, the EPS is expected to reach 69 cents, meaning about 13.5 on the forward PE ratio. We need to add context here. I would like to add expected FY 2027 PE ratios of some of the largest traditional banks and how they compare to SoFi. So if you compare them to JP Morgan, would be at an 11 multiple, Bank of America would be at a 9.57 multiple, SoFi would be valued higher at 3.5. But the revenue estimate 2023 2 billion 157 and 100, and then 20 SoFi is expected to more than double the 4.31, JP Morgan flat at 155, Bank of America relatively flat at 106. And the revenue CAGR, combined annual growth revenue, SoFi is expected to be 21%, JP Morgan negative, and Bank of America 1. As you can see, from FY 2027, SoFi is still high as a ratio, but it looks not far from Chase and B of A. Over the next 5 years, SoFi's revenue is expected to compound at a 21% CAGR. I think it could be closer to 25. While the revenue of the two giants will be almost flat, of course, JP Morgan, Bank of America, premium price is deserved, long history of success, loyal customer base, blah, blah, blah. I don't really think that's the case. You know, I think their customers want an alternative, and I think that alternative is SoFi, those freaking turds. But SoFi is an aggressive growth story, and companies expected to sustain double-digit growth over multiple decades also deserve generous multiples, and there is a high probability that SoFi will sustain its massive double-digit revenue growth for years beyond the next decade. According to BCG's research, the U.S. fintech market is expected to grow at a 17% CAGR by 2030, meaning that the growth momentum for SoFi's top line is likely to still be very strong and sustain double digits for multiple years beyond 2027. It is also very important to underline that BCG projects that the total fintech global market will reach 1.5 trillion by 2030, representing just 7% of the total global financial services sector. That said, even after 2030, there will still be enormous room for growth for the fintech industry to capture more significant part of the financial services pie. That's the thing, guys. SoFi and fintech can grow rapidly for the next 20, 30 years and still only have a smaller share of the entire financial services sector. The financial services sector is massive, guys. 1.5 trillion by 2030 only represents 7% of that market. So we're talking, we're talking about a 18 trillion dollar market by 2030 globally. To conclude this part, there is vast uncertainty regarding future cash flows since SoFi is a young company. Its EPS is still negative, but based on the forward PE ratio from 2027, we can see that the stock does not look expensive given the revenue growth rate and projected long-term tailwinds related to secular shift to fintech. Risks to consider, and SoFi's business is nascent, uncertainty, risk for investors, business models young, EPS still negative, still generating losses. There's no certainty regarding time and the sustainability of profits. The company operates in a fiercely competitive landscape with the financial services industry, both traditional large-scale banks, emerging fintechs. So there's a lot of competition out there, and there's no reason to say another company like, an Elon Musk. I know, other companies like Apple have tried, but it's not as easy as people think, guys. It's not as easy to build a SoFi as people might think, but there is a possibility somebody could do it. Expanding financial services offerings, SoFi faces risk traditional banks face, credit risk, loans, defaults, the regulations, complex web of regulations, failing to comply. Bottom line, to sum up, SoFi is a strong buy for long-term investors. Strong buy. Strong Buy, SOFI, strong buy, SOFI, strong buy. For long-term investors seeking exposure to a rapidly growing fintech phenomenon, it is a long-term bet, but the upside potential is massive if the company can sustain the expected ambitious growth trajectory. The company has vast room to improve profitability metrics, and I believe that cross-selling opportunities, thanks to the diversified portfolio of offerings, will be the key to enjoying the economies of scale effect. And remember, guys, this guy is legit. This guy is legit. Four-star financial blogger, CFO, has qualifications. Guys, what's the stock going to do the rest of the week? We came up and we got back above this green line that was critical, back into this little channel, this little wedge that we want to be trading in. We're heading for a showdown. Earnings is right here, guys. The wedge is getting tighter and tighter. The highs are getting lower. The lows have been getting higher. That's broken down slightly, but we're back in. Um, Guys, it really depends on the ER. I hate to say it. I know I say market makers can take it and do whatever they want with it, but it does depend on the ER. If it's beat, strong triple beat, I think the stock makes a strong move up through 10 bucks. But it doesn't look like we're going to see that big move pre-market, guys. The market makers have sucked all the volume, all the excitement out of the stock. I think they're intentionally keeping the stock way out of the media. Look at the news at Seeking Alpha. Their articles July 13, July 8. SoFi slips after Morgan. There's been a bunch of stuff that's happened since then. They have their analysis up, but as far as the news, guys, it's very, very limited. Let's just take a look briefly to see what Tip Ranks is doing. I know these, like, you guys don't, respect some of these sites I read, and that's fine, but, they pass the time of day. SoFi Technologies, the path to profitability remains uncertain. They still have Kathy Wood. Yeah, so they're just basically trying to suck all the life out of the stock, give you old, outdated FUD and articles, and just make people lose interest. So, guys, 38 million traded yesterday, 34 million today. Volume is pretty low, but the stock looks very solid, up 19 cents on the day on that low volume, sitting at $9.52. Let's get you one more check of after hours, guys. The short showing 3 million returned net today. I can't really buy that, guys. I would have expected the stock to run up, but volume was flat, really held from the algo there from 11:30 all the way to 2 exactly, and then the stock started to march up. And then again at 3:08, it just went straight up at that, greater than 45 for the rest of the day to close just over $9.50. Guys, down in the comments, tell me, what do you think SoFi is going to do for the next 2 days coming into earnings? And what do you think it will do if earnings is just okay? What do you think it'll do if earnings is great? My thought is if it's earnings are so considered lackluster by Wall Street. Of course, they're going to attack the stock. But if earnings are amazing, some of these shorts might flip and go long. The time is right. If they're sure that SoFi is going to make a profit in Q3, or at worst case Q4, some of these longs, some of these market makers, some of these institutions might want to buy in now while the stock's still less than 10 bucks. And who knows, once they hit net profit, stock could be 12, 14, 15. They might never get a chance to buy at these prices again. But market makers tend to do what they want, but ultimately fundamentals matter and the truth catches up with them. Guys, please leave me your thoughts in the comments. Let me know what you think about the SoFi stock. The ticker symbol is SOFI. My name is Danny Deals. The show is Un Poco Mas, where we try to give you just a little bit more. For Hurricane Lopez, Stock Karen, and the rest of the team here at Strong Arm Trading, we'd like to say thank you for tuning in, and we will talk at you again real soon. You guys have a great night.